Hey, welcome back everyone. It is time for another red hot covered call video. Today I got a treat for you. We're going to talk about the best stocks in 2019 we should be buying for covered call writing. Now, I've done this video before, and I'll tell you what, I rewatched that video, and that guy in that video cracks me up. I'll tell you what, where has that guy gone? So I'm going to provide that link for you. We're going to talk about that video, the absolute secret to buying great covered call stocks. Now look, in this video I'm going to show you a spreadsheet that I use to track all of my covered call profit. And a lot of you might ask, hey, I want to get that spreadsheet. Well, if you go to ctpdashboard.com, I offer all the spreadsheets up for you for free. And look, they're homegrown spreadsheets that I created. And when I started doing my early videos, a lot of you folks would say, hey, John, I love the video, but I want that spreadsheet. So what I did was I put them online, I offer them up to you for free, and I even have how to use video. Look, it absolutely blows my mind that anybody would charge for a spreadsheet. And while you're there, go ahead and click over to facebook.com, search CTP Dashboard, and follow my Facebook page. You cannot believe the off YouTube discussion we're having there. So many people, so many like-minded people are asking questions or answering questions. I love it. It's a place where we can go to get our covered call questions answered. This is about a community and being a part of something that is ultimately moving towards the same goal as me. And that's what we're trying to do here. So look, if you want to learn how to sell premium, use our stocks to write covered calls, collect that monthly premium, and do it month over month over month, then look, you want to be a part of this channel. So look, if you like what you're hearing today, subscribe to the channel. It's right there and it's free. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. And what we're doing is this. Some of you have noticed right now that I updated my numbers for 2019. Just this past Friday, 5 trades came off the board, and it absolutely blows my mind that in 2 months, I'm averaging $7,500 a month. Do you remember when I first started this over 3 years ago? My very modest goal was to make $1,200 a month. $1,200 a month in retirement. Could I use the stocks that I own to generate a mere $1,200 a month? And that has absolutely blown up to where I generated $55,000 for 2018. And this year, I am absolutely on course to beating this year's number. Now look, I know for some of you, this is new and it might be confusing. It might be overwhelming how we use our stock. We give somebody the right to take away our shares from us and we collect a premium for that. But it really is that simple. But we need to get our financial education. We need to get comfortable with the strategy, and then we need to do it. I haven't done the free CTP newsletter in a while, and I'm rebooting that for March. What I'm going to do for the March CTP newsletter, that's a free covered call newsletter that I'm going to reboot and put out every month starting March 2019. In next month's free newsletter, I'm going to put a video in there of the absolute basics of covered call writing. Now, here's the thing. We're not going to talk about the basics from I own 100 shares, I'm going to write a covered call. No. We're going to go back to where we need to open an account. Yes, we're going to go all the way back to the absolute basics, because recently I went to New Orleans and had a mini reunion with some of my USS Gary shipmates. And one of my buddies said, look, John, I love what you're doing online, but I do not know the stock market. And when I say I don't know the stock market, I don't even know how to buy a stock to do what you're doing. So that's when it hit me. I really need to create a series of videos where we literally start from picking an online brokerage to setting up our account to write covered calls, and then the actual execution of writing a covered call where we click sell to open, right? Sometimes even that can be confusing. So that's going to be a 3-part series in the free CTP newsletter. Hey, look, you need to be a part of it. Head over to my website, ctpdashboard.com, sign up for the free March newsletter. Now look, let's go ahead and get to those best stocks we should be buying when writing covered calls. Now what I want you to do is go over to my channel, and what we're going to do is we're going to click in the search window. We're going to type best stocks. And when we do that, you're going to see this video right here. In fact, I probably put a card up there. I definitely put the link in the description. You want to watch this video because for a lot of you, you may not know the golden rules of covered call writing. The golden rules of covered call writing are those unwritten rules of things we need to adhere to make sure we're buying great stocks stocks, they adhere to certain golden rules. We want to limit risk, right? We want to keep this a conservative strategy, so we want to adhere to the golden rules. We do not want to just buy a stock because we went to a website that showed us the highest possible premium we can collect in a 30-day period. We absolutely do not do that. Why? Because we have to own these stocks. And when we have to own them, we own the risk. If you know nothing about the stock you're about to purchase, how irresponsible is that? See, one thing I always tell you here at the channel is we need to get our financial education. But what does that mean? Well, a lot of it has to do with doing our due diligence. We have these golden rules with covered call writing, and we're going to try to adhere to those golden rules. And with covered call writing, we want to purchase great S&P type companies. We want to purchase stocks with a lot of volume, right? We want to try to purchase stocks that have dividends in case a trade goes bad. At least we're getting paid while we hold it. There are many covered call golden rules that you try to adhere to. So look, the very first thing I'm going to tell you right here, the best stocks to be buying in 2019 for covered call writing are stocks that we have done our research on. I want you to watch this video. My number one secret, golden rules for picking great covered call stocks. So at the end of this video, watch that video. Now, before we move on, I wanted to show you this. This is how 2019 is working out for me. Look at all those covered call writes. We are now in a market that is moving higher. So for the most part, we're going to write those out of the money covered calls. Some of you will write in the money or at the money, but right now we want that stock appreciation. So when we write that covered call, we hope that the stock will go higher. So it's always great to buy those stocks that are moving higher. Now, if you look at the charts for a lot of these stocks, you're not going to see that upward trend. We had that horrible disaster in December. So when you do your research on a lot of these stocks, you're going to see this nasty fall. What you're going to have to do is step back about 5 years in your charting and understand that as we recover from December 18th and the sell-off that happened, these stocks are starting to move back to where they were before the markets fell. So when we look at that upward trending chart that we want to see when we're purchasing that great S&P type company, you're not going to see a pretty picture right now. But part of this is you have to know the stocks, you have to know the companies, and you have to understand that the great ones will be bought back up. Adobe is a great example where they hit a high of 270 last year. They traded around 250, 240 for the most part. Then it tumbled to 200. I thought Adobe was going to be one of those stocks that the market would rally back. And sure enough, it hasn't been but a good solid month, and Adobe's trading back at 260. So, a part of this is gut, part of this is understanding your research, understanding the stocks you're going to buy. And that is what the core golden rule when it comes to covered call writing is. We have to own the stock. Now, I know sometimes we're going to make these short-term trades and you feel like, well, I'm not going to own the stock for that long. Hey, look, I'll tell you this. Had you been playing Wynn last year and we got the news on that Monday morning that Steve Wynn was messing around, you'd have been down 40 points after just buying it. When you buy that stock and the stock tumbles, most people don't have the discipline to sell at a certain percentage loss. I always tell you, you have to have that ripcord number. Well, most folks don't. And what happens is we just find ourselves stuck and we're really in the hope and pray business that the stock comes back. So definitely, if you're going to play those very short window trades, buy the great stocks. So if you get stuck with them, then at least you're holding a great stock. I always look at it like this. If I have to explain to my wife why we're losing money in the stock market, at least I could say to her, look, we're buying great companies. And at the end of the day, I always feel like Wall Street always buys back the great companies. Now, I'm going to show you 3 stocks, but understand, I'm not recommending these 3 stocks. See, what you have to understand and wrap your head around is the covered call strategy comes with strategies within the strategy, right? So just hearing some guy on a video say, well, buy these stocks for 2019, that is absolutely a poison pill for yourself. If you watch those videos and you just immediately go out and buy the stock somebody's recommending, and I see these videos online all the time, they want to get clicks. They want to get clicks to their videos so they get paid, right? So they're going to do these videos where they're going to show you the top 3 stocks they're buying, and they give you all this mumbo jumbo. But at the end of the day, they really want to be searched high in YouTube, so they end up getting clicked on. And when they get clicked on, they get paid. So what I'm going to tell you is those videos are great, but at the end of the day, you're going to do your homework. You're going to own it. Then you're going to be able to understand what you're owning. And when we do it, we take ownership of that. So with that said, I'm going to show you 3 stocks here, but again, it's not the 3 stocks that I picked. It's the covered call strategy that I'm going to use, and these stocks just check the boxes for me. Amgen is one that I'm going to talk about. So I'm going to do my research. I'm going to make sure Amgen has an upward trending chart. I'm going to make sure it pays a dividend. I'm going to make sure it has a great business. I'm going to make sure it has tons of volume. These are things that we need to know before we invest in anything. And anything less can be considered a bit risky. Amgen is a stock I like to use for a cover call strategy where I capture the dividend. And what I mean by that is I'm going to buy a stock that pays a juicy quarterly dividend, and I'm going to try to play this tight window, this 30-day window with a great S&P type company, a company that has huge earnings, huge profits. And what I'm hoping for is this is going to be a one-time 30-day trade for me. I may not hold Amgen in my portfolio for a long-term buy and hold, but if I get stuck with Amgen, well then, hey, I've done my research. Now, with that said, Amgen is one of those stocks that pays a huge dividend. And when I say huge, I'm talking $1.30 a quarter, okay? So if I buy the stock and then I write the covered call, and quite frankly, I could pick up about $1.50 on the covered call, a 30-day, maybe a $10 out of the strike. So for example, Amgen's trading for $188 right now. I write the 195X, I get $1.50, and if I write it so I straddle that X date, meaning the X date is not the week of the expiration. What I'm hoping for is that Amgen moves towards that 195 mark. I'm able to collect the dividend because I'm going to hold the shares through the X date. Then as we get into expiration the next week, Amgen gets to 195. I collect all this money and we look to move on. Now, one thing I want to mention, a lot of you have been hitting me up in the inbox. Can my shares be taken away before the expiration date? I don't want to drift off the topic, but let me say this. Understand, the minute you enter a covered call contract, they can take your shares minute 1. Now, usually, I'm talking 99%, your shares won't be taken away. It's very rare that you'll have your shares taken away. But with that said, if you have an X date, an X dividend date, let's say on the Thursday before the Friday expiration, hey, if your stock is above the strike price, you will have your shares taken away. It makes sense, right? If they take your shares, they own the shares, they then collect the dividend, look, they have made money on both sides of the trade. I've had that happen with Bristol Myers and a couple other of my stocks. So the short answer is, of course you can have your shares taken away, but it's most likely you won't. That's why in this example, I explained that I'm going to write that covered call with an expiration date about 1 week after the ex-dividend, because usually we're not going to get to 195. And as we get through the X date, I'll keep the shares, and then hopefully it does get to 195. They'll take my shares. I get to 150. I get to 132. I get to 195. And this is an awesome green trade. So in the case of Amgen, what's the best stocks to be owning for 2019 when we write covered calls? Well, if we're going to use the dividend capture strategy, we definitely want to own great S&P type companies, huge volume, huge profits, right? Great business and companies that pay a dividend. That's going to be our foundation for the due diligence as we go out and spend our hard-earned money for these stocks. Now, another covered call strategy might be playing an ETF. Hey, this happens all the time. People do not want to own stocks. They want to own ETFs, and with ETFs, they reduce the risk. The reason they reduce the risk is because ETFs are a basket of stocks that limit risk, right? For example, if I own Wynn, I'm holding all the risk of Wynn. If Steve Wynn comes out, news that he's messing around, stock falls from 200 to 100, I own that risk. But had I owned the ETF of the casino stocks, not all the stocks fell. So my investment would not have fallen as much. So ETFs are a great way to write covered calls because we minimize our risk. Now, with that said, there's risk in everything. I mean, you kidding me? Look at that risk right there. You buy the stock at 290 and it falls all the way down to 230. There's risk in everything we do. You know, one time I had somebody on Facebook say, John, if I put money into the stock market, when do I start making money? And, you know, that comment just blows my mind because a lot of people just don't understand the market. So getting our financial education and understanding the risk is absolutely paramount to being successful. Well, a lot of you will use the S&P 500 and it minimizes risk because we have a basket of 500 stocks. But look, you can write covered calls on these ETFs. And like I mentioned to you recently, there's ETFs that are 2x, 3x, Forex, you can use those ETFs, write covered calls against them to collect higher premiums, but the ETF tracks the index like the Dow, the S&P. So again, we reduce risk because we're adding more companies instead of taking on that one company risk. Now let's talk about a company like Microsoft and why I like Microsoft for my covered call rights. For me, Microsoft checks all the boxes. They have huge daily volume, which means on most every option, I'm going to have open interest. Right? I talk a lot about the golden rule, open interest. We want to have an open interest of 100 or above because when we enter a trade, we want people interested in that option. Look, if you don't know what open interest is, what you'll want to do is open interest for options. You know, for every strike price, there's people that are interested. Now, that's called open interest. That means there's open market orders sitting there for that strike price. Well, if you only have open interest of like 1 or 5 or 10, that means you're not going to get the best price. So we want a lot of volume. We want a lot of volume so we can get the price we want, meaning the options will move. The bid-ask spread is going to be a little tighter. I've told you many times where I've played stocks where the bid and ask spread was 30, 40 cents, and you're never going to get your price. But a company like Microsoft's going to have a bid-ask spread in the pennies, literally in the pennies, because they have so much volume. They might have open interest of thousands for a particular strike. So you want that volume because generally volume means open interest. And I love that dividend too. You know, if I get stuck holding a great company like Microsoft, they're going to pay me while I'm holding it. And that's important. How many times we talked about how the stock market works today? They run them up to sell them off to run them up. You might get stuck holding a stock like Microsoft. So while you're holding it, you might as well get paid. That's how I see it. I want to get paid while I'm holding this bag of a play. Now, Microsoft's a great stock, so I'm not worried if the stock market falls. Now, another thing is we want that upward trending chart. Now, this is not a 5-year chart, but for the most part, if you pull back a 5-year chart on Microsoft, you will see it has nothing but an upward trending chart. And that's great, right? Because when we buy a stock, we want to write that out of the money strike, have the stock go to the out of the money strike, have our shares taken away, collect the premium. Man, we look to do it again. So Microsoft's one of those stocks that does that. Now, yes, it has its ups and downs. I mean, geez, just look at that. There's risk in everything we do. Now, one last thing with Microsoft that might be an oversight. Microsoft has weekly covered calls. You know, a lot of stocks don't have weekly covered calls. You can only do the 30-day covered call. I'll give you an example. I'm trading UDOW right now. UDOW only has 30-day covered calls, meaning February 15th, March 15th, April 15th. You know, sometimes we want those stocks that trade weekly, and big companies, usually huge companies, have weekly covered calls. The reason for that is because they have volume. When you have volume, you have action. So big companies like Microsoft are going to have weekly, monthly, 3-month, 6-month covered calls. They're even going to have leaps. You want more choices when you're picking your options. So hey, buying those great, huge S&P type stocks are going to get you that. With that said, it goes back getting that financial education and making great decisions. The best stocks for 2019 for writing covered calls and cash secure puts are great S&P type companies, have a lot of volume, so we could have those strikes that have more than 100 open interest. They pay a dividend. They have that great 5-year upward trending chart. They have a great business. That's where we're going to begin our research. You can use great traditional stocks. I mean, I use Chevron all the time. Great bellwether stock, writing covered calls every month, collecting that dividend every 3 months. I love using a company like Chevron. It checks all my boxes. And hey, at the end of the day, when I use great stocks like that, I find that I have more success than failures. And I'll tell you what, at the end of the day, I want to make good decisions because usually when I'm making good decisions, it leads to more successful trades. I hope you sign up for the CTP newsletter. It's free. Go back to my website and do that. I'm going to do a 3-part video series where we get back to the basics of covered call writing, and it's going to get back to where we open an account and how you set up your account so you can write covered calls. That's very important because otherwise you just might get frustrated. And finally, at the end of this video, you can click the link to watch the video I did 1 year ago, the golden rules when buying great stocks for covered call writing. I hope you enjoyed this video, and if you did, can you bang that like button because it lets me know you like what I'm doing. And hey, look, until next time, I hope all your covered calls are profitable.